we'd like to introduce our moderator for today. Our moderator started his career, in Union Bank as a lead management trainee before specializing in trust as a portfolio manager, primarily focused on the equities market. He managed various UITFs, high net worth, and corporate accounts over his 6 year stay in the company. He moved to Fintech in 2019 as a product manager under the Blockchain Center of Excellence, focused on blockchain and investments initiatives. Most recently, he was the overall coordinator in Union Bank for the Bonds.ph app, which is an award-winning joint project with PDAX. That was the first digital mobile channel that allowed Filipinos around the world to invest in RTBs. His background and passions are heavily linked to investments and innovation. He graduated with honors from the Ateneo de Manila University with a major in management economics and a minor in strategic human resource management in 2013. He further built up his investment knowledge and graduated with distinction from Trust School, became a certified treasury professional, and eventually became a CFA charter holder in 2018. He then took a master's in innovation and business from the Asian Institute of Management, graduating with distinction. He also has global certifications as an innovation associate, Scrum product owner, Scrum master, and cryptocurrency trader. Let us please welcome Mr. Ramon Miguel Cervantes, CFA.
Hi, good afternoon, and thank you for such a warm introduction. I'm very excited for our speaker today because, as mentioned earlier, we do have some projects with him, so definitely a familiar face. Before starting PDAC, our guest speaker began his career in banking and had various roles in securities, trading, and business management. At HSBC, he was vice president and head of corporate trust, and throughout his career, he was a financial markets professional and had a deep interest in innovative financial technology. In 2017, he completed his MBA at Wharton School of the University of Pennsylvania, majoring in finance and real estate. He graduated from Ateneo de Manila University with a degree in management engineering, and he has also completed his CFA program and has been a CFA charter holder since 2013. So again, very honored to be here today. Let's all welcome Mr. Nichel Gaba, CFA.
Thank you so much for the introduction, Ram. It obviously a familiar face. It's nice to see you here. And good afternoon to everyone.
Yes, hi Nichel. It's been a while since we last talked, but definitely great to see you and hope you're doing well in the midst of what's happening right now.
Yeah, so that's a good point. Everything now is going digital, and obviously cryptocurrencies is one of the, I guess, asset classes, if you can call it that really benefited from everybody being at home and also because of what's happening in the global markets. So yeah, everything's moving at a very fast pace. And I think everyone is also just trying to keep up.
Yeah, definitely. And I know we're going to get into the weeds about your career, about what's happening in Fintech right now. Obviously, a bit of grain of salt because we're there, but definitely a lot of fast-paced, exciting new things coming to play. But before we get to that, I'm sure you have a lot of the different members or attendees here right now who want to find out how you actually got started. So if you don't mind, maybe you can speak to the reasons why you pursued finance in the first place. Did someone influence you or did some event kind of push you towards this track?
Sure. So I guess when I was in college, I mean, maybe even before that, I was never the presenter type. I was never an athlete or whatever. So the only thing that I really knew that I was quite adept at was math, right? Like I was always a numbers guy. And I really felt comfortable making decisions based on numbers. So when I obviously got into college, I picked a course that was very quantitative, and it was just, I guess, a natural progression from there that I'd end up in a very quantitative field. Now, I think I point out also, since I graduated quite a long time ago, that it was just right after the global financial crisis. So there were not a lot of roles in banking or anywhere in finance in the early parts of '09. So I actually had to teach first in Ateneo for a semester or two as I was uh, looking for really a finance job. And HSBC started recruiting. I think that was in September. And I joined their management associate program. Back then it was called management training program. And it was a program where I'm sure a lot of you are quite familiar with the MT programs. Like they assign you in various roles and various parts of the bank, and then afterwards they figure out where you probably fit best, and they put you there. Yeah.
No, that's great. I mean, I'm also a product of a management training program, so very lucky to have taken this path, right? After the management training program, were you already in trust, or did you have other roles before you started to move into that direction?
Mm. Actually, I think with HSBC at the time, there was not a lot of uh, and maybe there are HSBC employees here. I don't know, but at the time, there was not a lot of leeway for you to really decide where you want to go. So I think I was placed in an area where there was really great need, and that was in securities. So I was in the custody business of HSBC. Siguro that was my first real stint. In hindsight, that was probably a very good thing because as custodian, you actually have a very unique insight into how the markets actually work behind the scenes, and that really informed a lot of what we ended up doing at TDAX down the road.
No, it totally makes sense. I mean, a lot of people they like the flash, right, of what you see on the front end, but it's the knowledge on the back end, the infrastructure, what makes the market work that allows you to probably be a lot more successful now that you're in this role where you're running the company. You understand both sides of the coin. But I think one of the things that probably would also benefit the attendees is you got to mention, right? You transitioned from custodian, then you went into trust. Were there any maybe techniques or decisions that allowed you to make that transition, or maybe tips that you have on that kind of path?
Right. I think as with most careers, no, and maybe particularly in finance, trust is super important. Trust is paramount. Trust of your clients, but actually also trust of your colleagues and your superiors, because the stakes are always so high in finance, right? Like one bad call, you lose millions if you're a trader, or one bad client interaction can turn into a lawsuit, or one screw up turns into a regulatory inquiry that threatens the institution's license. Right? So the stakes are super high. Trust is paramount, and so I think what worked well for me at the time was uh, I I had the opportunity to be placed in situations where I could build trust with my superiors and my colleagues. And I think, how do you build trust? Um, well, it's not really yung mga inuman, no? They help, right? Like, oh, let's happy hour, blah blah blah, one for the
Mm.
road, etc. That helps. But I think if you solve problems, for your colleagues, for your team, that's how you earn trust points. Um, uh, so I think when I was in securities, uh, I started there as a more in a more general and a more specialized role. It was about making the processes more effective or more efficient. That was my role, process improvement, and then gradually uh, I started managing uh, the risk and compliance function of the custody business, and then eventually I ended up in a business management role. So that was more ano naman, more generalist, right? So a bit of strategy, a bit of operations, a bit of risk and compliance and legal, etc. So I benefited from a more from a go to a more a broader picture. But you see, at the time, I was also taking the CFA exams, right? So this
Oh,
was
okay.
uh, my level one was in 2010, which makes me ancient. Um, uh, but I felt na I really wanted to be in an investing role, right? Like I wanted to be client facing. I wanted to manage funds. But yeah, so when I told my bosses then that I wanted to make that shift, it also so happened that there was an opening at the HSBC Trust Department, and I took it. So that's how I moved out of securities.
No, no, that's great to hear. Actually, one of the other things that I wanted to ask about is that, of course, you decided to take that track. You started to study for the CFA. And I was really wondering, at what point did you feel that the CFA program became relevant in your career? So I guess in these early stages, it did help you make that case, I assume, when you said that I'm studying for this is something that's really aligned with the industry. Uh, are there other things that maybe you could remember in the early days when you were taking your exam that kind of help push the way?
I know this is a obviously this is a CFA society talk, no? So people might say, "Oh, obviously it's gonna be biased," but I kid you not, right? Like the CFA program was super helpful to me because, well, number one, uh, studying finance, maybe in college or anywhere else, really, like through podcasts or some pop books, they don't give you any standardized knowledge, right? Um, and so if you well at the time that this was my thinking at the time, if I wanted to be as credible as my counterparts in Hong Kong or Singapore or the UK, I mean, the Ateneo diploma wouldn't mean much, right? I needed to know what they could know. So the CFA program helped level the playing field for me. Like I think after you complete all three levels, you won't know everything about finance, but there will not be anything in finance that's beyond your knowledge or that's beyond reach, right? Because it gives you that solid base of fundamentals. Um, so that's one. Second is, and I guess I learned this early on in my career. Uh, Everyone judges a book by its cover, right? In fact, it's almost wrong to expect that you won't be judged by your cover, because the way the world works, and this is just my understanding of it, and the way that the market works is we rely a lot on signaling, right? We rely on brands to communicate the underlying quality without the pains and rigors of actually trying it out, right? So no one's gonna, I mean, let's face it, no one's gonna, you know, uh, understand na you're really passionate about finance, etc., or you're really a math genius. You're like super galing, but then you don't have any credentials. You can't expect that person to place their trust in you. In fact, it would be unethical for that person, especially if he's managing somebody else's money, to put their trust in you because you're not sending the right signals. So, from a signaling standpoint, this what does the CFA say, or what does the CFA stand for? Stands for it tells the world, or it tells your counterparts that you're committed to this space, you're committed to learn and grow, and you're committed to a certain ethical standard. And those two things, having that early on in my career or in a career, is really very helpful.
No, I totally agree with you. I mean, even from my perspective, right, there have been times when you go to a client, and especially when you're starting out your career, you're probably a bit baby faced, and then they're going to wonder if they should be trusting you. And something like the CFA, again, obviously, this is sponsored by the CFA, so some people might need to take this with a grain of salt. But I'm sure you've experienced as well that the way that people look at you, whether it's right or wrong, after you have those letters after your name, there's a bit more gravitas in how you present yourself. And I think it's part of it. Yes, you have a bit more confidence there, but it's also the learning that you probably get during that path, right? I mean, you mentioned you've taken level one, what's a decade ago, and then you've completed the charter already, and you have this discipline now of whatever you don't know, you have. You mentioned, right? It's not beyond your knowledge. You
It's
can
not
understand
beyond.
better.
Yeah,
Yeah.
correct. Mhm.
Great. And I suppose now people are probably wondering, okay, you had this stellar career in HSBC, and then you decide to make this shift, a shift that not many people might be willing to take. So maybe you could give us maybe some insight on that. What made you decide to change into this track of fintech? What made it interesting for you?
Actually, ano rin, ano, after I guess I bear my thoughts around this, I invite your insights also because I think you came from really a fiduciary role straight into fintech, whereas mine was more, I guess, was more uh, how do you say this, happenstance na I saw an opportunity in this novel technology and decided to just make a big bet on it. um, uh, I think I go back to a lot of the things I learned about markets, both through the CFA and also through practical experience working in the Philippine financial markets. Um, Markets are meant to be frictionless, right? Like the ideal market shouldn't have friction, should have access to transparent information. Everyone gets access to the best prices, the best knowledge, and exchange happens seamlessly. Um, but because of physical constraints, that's never really been the case, right? Um, in probably in the 1800s, equities markets needed to restrict access to the exchange because physically hindi sila kasya sa building, right? Like you're really not gonna be able to fit everyone there. So that's when they probably decided, hey, you know what? We need to have members. We need to have market members so that it's the member that places orders on behalf of someone, right? And then as rules come into place, we really need members because members will comply with our rules, etc. Um, and so we introduced layers and layers of intermediaries in order to grow the market. Um, Now, it was essential at the time to rely on intermediaries because it was very difficult to grow the market given the infrastructural limitations of the time. But now it's a whole new world, right? Everything can be digitized, and so from from intermediaries being a an engine of growth in the earlier days, today intermediaries introduce more friction than expansion, right? Like because they have to take fees, they have higher standards for clients that they bring on board, etc. Um, and uh, and I I've always been a believer that industries evolve because of the technologies that enable greater things. And when blockchain technology came to the forefront, I thought, you know what, this is it. This is the technology that will make markets truly efficient and accessible. Um, and at the time, I was also thinking, you know what? Well, what if yung pie in the sky na vision na yan doesn't materialize? What then? And then I thought, you know what? Okay, even if we don't digitize the markets fully, just the fact that we can facilitate remittances much more affordably through crypto or tokens is in itself already worthwhile. So that was when I decided to. I was actually supposed to go into a banking job, but then I just you know biglang flick ng switch. I just decided to start PDAX. But
Oh,
I'm
that's
curious
great.
also to hear about your shift because you were in trust, right? You were in a I guess fund management role before moving to fintech.
Definitely similar with you, right? Sometimes there are things that kind of lead to this certain event. And I think for me, what happened was that because I had that discipline, which again, sorry if it sounds like a plug, but I got the discipline of continuing education from CFA and actually from my mentor who spoke earlier, Rob. So shouting out to him that, I should always be looking to expand my horizons there. And just so happens that the master's that I took, it was in innovation and business. And I felt like it would be great if I got to at least try exploring what it was like to develop projects, because those are some of the things that you learn in an innovation course. How do you do design thinking? How do you think of what the consumer would want? And honestly, when your role is really fund management, you don't get to have a lot of opportunities to do that. So that's why I decided to make a shift. And I think for you as well, right now you're in this role where you're creating a product and you see the technology that's backing it. You see what could be done, the quote unquote pie in the sky, as you mentioned. And it's interesting. We don't know exactly, of course, what the end goal is going to look like, but we have our own interpretations of what the technology could be used for and how it could benefit everyone. And I think that's one of the great things about fintech, that like any technology, there could be a lot of different things that come into play. It could be blockchain technology, could be AI, data science, etc. And you can mix and match a lot of these different concepts, and hopefully the end product is something that really, at the end of the day, a lot of the consumers, they won't really care what's the thing backing it, right? It's their experience.
Right.
So as you mentioned, if you're an OFW who's trying to send remittance and you find out that through blockchain or through crypto, or even if you don't know that's the reason why, you just know that it's cheaper for you to remit, then that's already the goal. That's already a success. So that's great, right? I mean, it sounds like you're very aligned and you feel like you could make that difference in terms of the products. And I guess my question now is that we know that the curriculum of the CFA, it changes whenever things are coming up. I believe, if I'm not mistaken, they've added cryptocurrency, a bit of data science there as well. Do you believe that the CFA program is still relevant given what's happening in technology, or even what's happening right now in the global context? Do you think they're able to adjust well?
Yeah, absolutely. So actually, because I took it so long ago, I didn't realize that cryptocurrencies have been added to the curriculum. I would suspect that the first place it will materialize is in ethics, right? Just because of recent use cases of tokens in issuing unregistered securities. And obviously, it's a positive development, right? Because as crypto becomes a little bit more mainstream, valuation methodologies are going to evolve. We'll have more thought leadership around the space and enable us to really take a full advantage of these innovations. Um, I think the fact that the CFA program doesn't just publish, you know, books every 5 to 10 years. They actually release updated versions every year. Shows how committed they are to staying up to date and relevant. At the end of the day, what is fintech, right? Fintech is really just financial services being powered by technology. So the underlying services or the underlying products, the underlying value that's being created, they are the same as they've ever been, right? But the mode of delivery or the more efficient means of delivering these services uh, is the only thing that's changed. So I think the CFA program will continue to be relevant going forward.
Well said. And honestly, I think one of the great benefits, at least for us as charter holders, right, we're able to, when we're asked to do the continuing education units, there's a lot of material that's sent over from different fields, whether it's fintech or otherwise, that can keep us up to breast with what's happening in the industry, not just locally, but of course globally. And I wanted to really dive into that one topic that you mentioned. You did mention ethics, and that's something that, with what's happening in crypto, of course, in blockchain, a lot of people are concerned about potential ethical issues, moral issues that are happening. So maybe from your experience, you could give everyone here an anecdote, a scenario where maybe you were put in a situation that is a little bit confusing or difficult ethically, and maybe how what you've learned in the CFA helped you navigate through that.
You know, I probably uh, well, when I studied for the CFA, I thought that um, maybe the valuation sections or FRA or equities, fixed income, they probably would be the most useful. Uh, but now in my current role, actually, we face ethical decisions almost every day, right? When PDAX first started, crypto was still largely in the margins, right? It was still it wasn't a, you know, it wasn't as distrusted as it was maybe 5 to 10 years ago, but it was still not firmly in the light, right? It's still just being regulated, cleaned up, basically. So uh, when someone comes to you and says, "Hey, I want to buy 100 million pesos worth of crypto, but my annual income is just 100,000 pesos." And so what do you do, right? Um, uh, and I kid you not, right? For a startup, that's an extremely tempting thing, right? Because a startup that doesn't make money will die, right, without any cash flow. So it's not like a bank where, or a bigger institution where, you know, busog ka eh. So you don't really need to get your hands dirty. But in fintech, a lot of these companies are startups that are burning cash every month. The temptations are much greater. um, but I think, no, no, and I guess you're somewhat familiar with this because in PDAX we're very clear about our three values, right? Three I's really. So integrity, inclusion, and innovation. Integrity is number one because we're playing the long game. At PDAX, we're playing the long game. We're not in this market to like buy low, sell high, or like facilitate ICOs that are scams. But we believe deeply that all of these things need to be part of a legitimate marketplace. So the decision then for us I guess, have very high standards against money laundering or terrorist financing risks was an easier decision to make. Um, and I think I mentioned this earlier also. Finance is about trust, right? So, and how do you build trust? You build trust by creating value every day incrementally. And if you have that mindset, and I think uh, uh, the CFA program really harps on ethics because without any ethics, no one's going to trust any financial manager ever, right? Um, it's vital. And there are, honestly, I probably shouldn't get into too much detail. But even today, like, and not just in crypto, right? But maybe in fintech in general, there are so many small uh, ethical decisions that need to be made. And maybe not to go into specifics, pero why is it more prevalent in fintech than in other industries? Because in fintech, there's more information asymmetry, right? Because you are the fintech firm, you probably have more knowledge about this new technology, new service, and so you are actually in a position to take advantage of clients, right? So in this situation, the ethical demands are much higher. Uh, the second reason why ethical demands are much higher is the regulations themselves are still evolving, right? It's not like in the traditional financial services industry where what's right and what's wrong are very clear things. In fintech, a lot of the services you do still have rules that are evolving. So if you're not guided by a good ethical foundation, you'll see yourself maybe make money in the short term, but then longer term, you're out. You're out of the game.
Totally correct. I mean, that's what sustainability is, right? It's not just making money for the next year or so. It's about having an industry or, sorry, a firm, a business that lasts for decades, something that's going to, hopefully, if you're very successful, it might outlive you. And that's something that I'm sure you're looking to build. But maybe for those who are uninitiated or maybe they haven't tried the platform yet, how would you probably describe PDAX? What is it right now and where do you want to take it?
Right now, it's a marketplace for cryptocurrencies. Um, the reason so the operating model of PDAX is very similar to any burst or exchange, right? We operate a platform, and then buyers and sellers can post their bids and offers, and then we just match the best trades. um, uh, the earlier operating models of cryptocurrency exchanges were more broker dealer types, right? So they post a bid, they post an offer, and then you suffer whatever spread that they dictate. That model, unfortunately, was not probably was is not the most conducive to further innovation, just because you don't get the benefit of price discovery, um, and the cost, which is something that blockchain espouses to take away, uh, is actually made void by the fact that you're paying very high spreads. So that's what PDAX is. So we're a marketplace for cryptocurrencies, but eventually, because tokens, blockchain-based instruments, are not just about cryptocurrencies. You can actually create real world assets represented by blockchain enabled instruments. PDAX's roadmap will include something like what we discussed earlier, or what you mentioned earlier, bonds PH, right? These are RTBs that are recorded on the blockchain, not solely recorded on the blockchain, right? Because we're still in the early stages of like R&D with regards to bonds PH, but that's really the direction for PDAX.
That's great. And for those of you who might be following the industry, right, there are a lot of other use cases for blockchain that's happening, which I'm sure you're looking at. One of the popular ones, like for example, are the NFTs, non-fungible tokens. So definitely, there are a lot more creative ways for people to utilize technology that exists right now, and that's probably one of the most interesting things about our industry is that we start out with base technology and people find different use cases, things to build on it. And that kind of creative freedom is not something that you would get if you probably didn't have some exposure to what's happening right now.
Hmm.
Um, I would probably also want to give the floor to you to maybe explain or to share what you feel is like your highest accomplishment so far in your career.
Uh, I saw that question as a guide questions, and I couldn't come up with an answer. And maybe because I'm still, I don't know, I still think I'm young. Like, I haven't like done enough. Uh, but so far, I think uh, maybe the biggest achievement is just taking PDAX to a point where it's no longer just another startup. Like and because uh, when I was working for HSBC, or for Macquarie or Evercore, I knew that the paycheck was gonna come, right? Like it's gonna come. It's gonna, you know, uh, I do well or I do poorly. It's gonna come every month. Um, so maybe the risk of entrepreneurship was not something I really accounted for properly when I made the decision to enter into PDAX. So I was really very anxious about making sure that our employees are have stable jobs, right? That we don't go out of business. I was very anxious about making sure that we make good on our commitments to our investors, because PDAX is VC funded. Um, I was very anxious about uh, making sure we represent the industry well in front of regulators and other institutions. So that means investing upfront in structures that can afford you robust controls. So getting from that point, and then arguably getting lucky also that crypto trading has become a lot more active these days, is probably what I'm most proud of to date. And I wouldn't have been able to do that if I could not signal to my investors the right things, if I could not signal to my employees that we're gonna do good by this market, and if I could not signal to the regulators that we're operating at the highest ethical standards, all of which have been the results of being groomed in a what the CFA tries to espouse.
That's great. Would you say those are like the top three factors that led you to success, or do you believe that maybe there are other things that if you were to give the advice, give the tips on how to better prepare themselves for a career in investment management or in fintech, what were the things that people should be looking out for?
Mhm. Maybe in investment management, I won't be able to like give too much advice just because when I was in HSBC Trust Department, we had very few discretionary funds to manage, right? So probably not the best source of advice there, except that probably the most important trait is to just really to have that habit of learning, right? You have to want to keep learning. In the same way that if you're a professional athlete, you got to work on your jump shot, right? You got to work on your follow through. You got to work on everything. It's the same with an investment management professional. You have to stay ahead of everything. But that aside, right? So fintech naman, probably I don't want to take up too much time here, but uh, fintech is a broad is a very broad description for very different kinds of services, right? I would say na may there's a it's a spectrum of two extremes, right? Fintech and tech fin, right? What am I talking about? Well, there are fintech companies that have financial services as their DNA, and they're just utilizing technology. So you would see them as probably less aggressive, but at the same time, probably it's easier to trust them also because of that DNA. So I would probably put Union Bank in that side, right? Like you're we know you as a bank, and you're offering technology enabled services. The other extreme naman is like they really are technologists, right? They're able to like build scalable systems, etc. And hey, you know what? We can use this for to enable financial services. Now, in that extreme, right? Uh, the firm that you join, wherever you plot in that extreme, right? The firm that you join uh, will siguro dictate the kind of experience you'll have in that company. Um, More technology focused firms, probably TechFin is let's say Gcash, right? They evolved out of a telco and are now offering financial services. Um, the experience there is you'll see that they're more focused on delivering products. You'll see na they're operating in a very fast pace, etc. Whereas I guess the other side, right, more formal, more established, less risky, probably. Okay. Uh, uh, how do you prepare yourself for a career in fintech? Um, uh, it depends on where you are in that, which firm you enter into that spectrum, because if you're on the more tech fin side, the most important rules there are product development. um, if you're a software engineer, you're a developer, you would be more highly valued there than if you were in the other extreme. I think that's just my opinion. But yeah, product management roles. But sa kabilang side naman, uh, I think if you have a good background in treasury, liquidity management, uh, I would say these days lending also, credit risk super important, uh, and compliance risk. Uh, the foundation that you build in a traditional institution will be very easy to I guess translate over into a fintech company.
All right, that's great. Thank you so much, Nichelle, for those parting words there. So I think now it's probably a good time for us to open the floor in case there are any questions from the audience, things that maybe we touched on a little bit and you want to get more information. Um, we'll see if there are any questions that are coming up.
For your questions, you may write on the in the chat box, or you may want to unmute yourself and turn on your video and ask Mr. Nichel Gaba. Please don't be shy. There's a chat box also available for you if you don't want us to see your face when you give us your question. So please type type in the chat box your question for Mr. Nichel Gabo, or if you have a question also for Mr. Ram Cervantes.
Well, maybe as no no as people are probably thinking of questions, or maybe na-bore sila, they're not tama na. I'll just torture you a bit more with some insights that I probably would want to share. A lot of uh, the press, or maybe what drives a lot of news items for fintech firms are, oh, so and so raised so much money, or like they're super highly valued, etc. um, but I guess the reason why that's the case is because the expectations are also super high, right? Because fintechs are expected to be able to capture mass scale on day one, right? Because wala nang branches, wala nang infra build out. So what's your excuse to not capture the market? So I think that's an important point to make, because that fundamental difference between a traditional company and a fintech uh, informs or drives much of the culture that you will see in maybe a traditional bank versus a fintech company like a Gcash or Paymaya or
Nichelle,
PDAX.
no, it's interesting you mentioned that. We actually got a question here. Someone's asking, I suppose, right? You mentioned the entrepreneurial side of it, and maybe we can dive into that a bit more. How do you manage your risk when you were first starting up PDAX? Like you mentioned, it's a bit different from knowing your paycheck's gonna come every 2 weeks to being in this scenario. How do you manage that?
Mm, you know, uh, with great difficulty and anxiety, because all right, it's no secret na a lot of startups fail, right? So there's various studies that say 70 to 90% of startups fail. I think the numbers are actually higher sa fintech because um, to put in well-trained AML professionals, to put in like robust systems in place before you get a license from a regulator to operate, which can take 6 to 9 months. You're gonna have to like fund all of those losses, right? So PDAX was very fortunate early on to have raised venture capital funding. So we were VC backed at the seed stage, but even then, right, like you have to be very deliberate in how you spend your cash. Cash is king, right? Which we all say in finance, cash is king. It's super duper true in a startup, because once you're out of cash, you're dead. You're out of chips. You're out of the game. Okay, so the way you protect yourself from survival risks or going concern risks at the very early stage of a fintech company is to watch what you spend.
Great. Thank you, Nichelle. Sorry, we have another question. actually interested. It's for both of us. So one of the questions says, how important is it to have a good mentor as you're developing your career? From my perspective, right, I had someone like Sir Rob who's here, and definitely it's helped me out in my career, whether it was starting out or even now I get to talk to him even for different institutions. For you, I'm sure you've had career mentors, whether it was earlier in career in HSBC and corporate. You probably have mentors right now as PDAC's founder. How important is that for you to really flesh out your potential?
Mentors are super important, right? In fact, I'd say that finance is it's career growth in finance is very apprenticeship based. Like you, parang Jedi Knight. Like you have to like train under somebody else, both to get the knowledge, of course, and also the relationships. So actually, baka magalit siya, but I see Rob. I will also call him my mentor, right? Because never mind. But yeah, so I also benefited a lot from mentors. Today, in fact, he's also a CFA charter holder. See Mark Yu. So I consider him also a mentor. Mentors are important because they're a BS filter, right? Like you're thinking a lot about what you want to do, or like parang what you believe is the right move, for example. But mentors are there to kind of bring you back down to earth and tell you, hey, wait, that's BS, right? Maybe you should think about it this way, that way, or maybe there's an underlying reason that's not related to the subject that's driving you towards that direction. So I benefited from mentors, hands down, for sure. Uh, uh, when I was in HSBC, so yeah, I had very very good bosses.
It's great. So it looks like Rob's able to mentor a lot of the CFA community now. Another question from Facebook Live. This one, I'm interested to find out your answer because it might be a very complex one, potentially, depending on what you say next. Is there a possibility that a financial crisis could occur after the pandemic? And what are the possible effects? What's your take on this?
So I hesitate to really answer because probably a lot more on this call are more qualified to respond, right? But financial crisis take on many forms, right? Like it could be because of a all right. Actually, you can say that we are actually in the middle of a
Yeah,
crisis, right?
exactly.
But we're not seeing it in the equities market, right? So this is probably a new kind of crisis where you can expect the economy to be impaired. You can expect a lot of scarring after the pandemic, but it's not reflected in the asset prices. Um, maybe a more relevant question is: do we expect markets to crash after the pandemic? Again, there's so many factors to think about there, right? A lot of the crashes in the history of markets occurred when there was very very high leverage, right? Very very high leverage, and then there was a change in some market fundamental that caused a massive a substantial devaluation, and then everybody panics, and then boom, nobody's lending, nobody's buying, nobody's consuming, nobody's investing, right? So that's a typical anatomy of a crisis. Right now, are we seeing a lot of leverage? Maybe we're not feeling it, right? But obviously, governments are starting to borrow a lot more than they used to, right? Just to combat the pandemic. But then you also have to consider that governments around the world are also expanding their monetary base, right? They're also well, there's definitely a lot of factors today that it's very hard to predict if there's going to be a a real market crash. But I will say this, and because obviously I'm in the crypto space, a lot of the movement of value from traditional markets into the crypto markets was really because of fears that if investors put it in equities, it might crash. If they put it in bonds, yields might go up. If they put it in real estate, wait, maybe that country, will succumb to like pandemic risks, etc. So there was a lot of parang fear there that drove crypto prices much higher this year.
Definitely I agree with you. And as someone who, of course, diversify assets, invested in crypto, in foreign markets, one of the things that always puzzled me is that how quick the markets were to rebound. In my head, I was thinking, and this is probably a few months, 2, 3 months after I left the market, where it started to crash. And okay, a lot of people are raising cash. And then suddenly, before personally I got to invest back a lot of the things that I was raising, you started seeing it pick up pretty fast. And there was no, at least in my opinion, fundamental reason for it to pick up the way that it did. And it was really interesting. So definitely agree with you. That's something to look out for in the crypto space. We're hearing a lot of these all-time highs now about different cryptocurrencies. Bitcoin, of course, taking the lead there. A lot of other altcoins are very interesting. So I know that right now it's called PDAX, Philippine Digital Asset Exchange. But one of the other questions here is, do you have plans to market internationally?
Uh, I think there's a lot of opportunity in the Philippine market. Uh, we get asked that a lot, no, as you can imagine, because okay, you have a crypto exchange platform, parang copy paste natin in like other markets, and this is something that our investors always think about. We're not we're not saying never, right? But for now, there's a lot of value to be unlocked in the Philippine market, and I strongly feel that this is where we can add a lot of value in the near term. But eventually, if we can create a lot of value in another market, then why not? Maybe we'll retain the name, or maybe we'll rename it. I don't know.
Stick to the initials, maybe, like a lot of these brands.
Yeah, exactly.
Okay, another question here. Someone is asking from Miss Donabel, not sure if you want me to disclose your name there. Just want to ask which is better when you are starting to trade or you're a new trader, traditional way or using fintech?
Um, Traditional way or fintech? Does traditional mean voice brokers, like on the phone, or traditional meaning just the fact that you go through a uh, a member broker? Right now, say it's if you go through a fintech company to invest, the underlying processes are still based on the, I guess, traditional infrastructure, right? So it probably makes very little difference from a parang cost perspective, or a value perspective. But from a user experience standpoint, it's much easier for fintechs to set up alerts for you, right? Or you want to follow someone else's trades. Well, some technology platform can help you do that.
Copy.
You want to
Yeah.
create fancy charts, by all means use a fintech platform. But yeah, that's probably the only difference. It's really up to you, your preference as a user. The underlying is the same.
Sure. I think I really am not sure exactly if they meant maybe talking to someone on the phone, like a relationship manager or account officer. But for some people, maybe that's what they're more comfortable with. And if you have the funds to reach, some of them have high minimums. If you have the funds to reach that, then definitely you can explore that if you're starting out. But I think one of the great things about platforms like PDAX and other platforms out there is that it helps democratize it. The minimums are a lot lower to get started, and assuming that you're willing to put the work in and study on the asset class or the investment that you're looking into, then you get to remove that intermediary. Um,
Right, correct. Actually, siguro more on that. No? So, what are the fintech platforms for investment use? We're not seeing a lot yet here, right? But In other markets, you see robo advisory firms, right, where they actually there's an app that actually just invests for you, right? So you
Yeah.
don't overspend your income. There are apps that are they're called discount brokers, right? So think of, let's say, Robinhood. Robinhood's a discount broker. Why are they called discount brokers? Is it because the prices are cheaper? Hindi. So they're called discount brokers because para silang discount airline, right? You sit there, they just take you to the place. No food, no show. Robinhood is like that, right? They don't offer research, they don't offer advisory, they don't offer fund management. They just really give you access to the instrument. That was never possible before, right? It was never possible before because if you were a broker before the age of the internet, how do you get your clients to trade, right? You have to be providing them with information, right? That's why most traditional brokerages have research arms because they give you a report and they encourage you to trade, right? Or they inform your decision to trade. But now we have the internet of information. Everything's out there, everything's for free. So now discount brokers are have the oxygen that they need to actually survive. So I'd be very interested to see how that can be executed in a market like the Philippines.